Hey everyone, Nisa and I are excited today to be joined by Ric Burton. He's a designer based in San Francisco. Rick, thanks for joining us.
Thanks so much for having me. Good to be on.
Yeah, so tell us a little bit about your journey. How did you get into the crypto space?
Yeah, just was lucky enough to stumble across Gavin Wood in San Francisco in 2014, and was starting to learn how to design products. And he gave a speech about Ethereum, and I just asked if they needed any design. And so I spent just a few months, well, even a few weeks actually, just mocking up the network monitor, first wallet, what a dApp browser would look like, and things like that. And yeah, kind of Vitalik crashed on my floor and a few other things, and a few of the other people rolled through. And then a couple of years later, when Ethereum really started taking off, I dove back into the space and started trying to design user interfaces with some friends of mine for Ethereum, and tried to build a company in the space, but couldn't figure out the business model at the wallet layer. And so now I'm just doing design with different teams in Ethereum, trying to help them out, as well as the emerging kind of set of people who have left Stripe. There's a kind of Stripe mafia forming, and they're all starting interesting companies. And so trying to help a couple of those as well. So yeah, mostly interested in financial technology and design.
So it seems like you're loyal to Ethereum. And Vitalik spoke yesterday at Consensus. It's New York Blockchain Week virtually. And so what did you think about what he had to say?
I'll be perfectly honest. I wouldn't call myself loyal to Ethereum, and I didn't take the time to watch Vitalik speak because I was working on something that I found interesting. But I can say one thing about Vitalik and Ethereum is that I think that one thing that's been really clear from the early days is that he had the best intentions. Now the execution hasn't always been perfect, but how many people in their early 20s are given the kind of responsibility for tens or hundreds of billions of dollars? Very few. And I think that it's really important to note that the people who are the people who build these protocols are the ones that have the biggest impact on their kind of results. And so while a protocol is essentially code, it's the people who write the code. And so I can't analyze protocol economics or how software should function or distributed systems, but I can analyze people. And I definitely sensed the same kind of positive energy about Vitalik back then as I think he's carried into the project now. And so to the extent that I'm excited about Ethereum, it's mainly derived from the people that still are building on it. And I think that's a better place to start than when people talk about transactions per second or any desired kind of economic throughput.
So DeFi is hit $1 billion, now maybe a little bit less. We had Black Thursday, March 12th, stress test. And since then, we've seen a lot of growth and development. So I know that you're working on one called Future Swap.
Yeah, so I just did a brief design stint with the Future Swap team. They're absolutely fantastic and really incredible that they're creating great products on top of Ethereum. So if you look at projects like BitMEX, they establish bets on the future price of different crypto assets. And they're totally unregulated, based out of Hong Kong and the Seychelles, and they're making more money than just about anyone. And when I dove into the futures market, meeting with the Future Swap team, I realized that betting on the future price of something is just a much bigger opportunity than trading the price of it. And this is valuable to society because by betting on the future price of oil or metals or different things, it allows you to kind of smooth out the price increases and decreases. These things are really critical for good healthy market infrastructure. And today, if you want to start a new futures contract, you need millions of dollars or relationships with Goldman Sachs or some kind of proprietary bank. And so the idea that we could construct futures contracts on Ethereum and kick them off is pretty exciting to me. And they're just starting with something very simple, which is ETH DAI as a pair. And so we designed a user interface for this, and they launched this thing, and it did $14 million of trading volume in a few days. And so I think that what that proves is that people are interested in participating in a futures market that is decentralized and provably fair. With BitMEX, it is pretty hard to know whether they're being honest, like how much they're trading against their book, or whether the liquidations are reasonable. And you can imagine a future state in kind of 5 to 10 years where it's easy to kind of programmatically prove, or even sooner, like maybe 2 to 3 years, where you can like programmatically prove that like all these futures contracts have been executed correctly. Yeah, and that just seems exciting. And like one of the many teams who are building something interesting on DeFi, and I've been trying to. My goal really is as a designer, I just want to help as many DeFi teams as possible, and hope that one of them really works out. So, yeah.
Mm-hmm. And you're trying to design for easy use and mass adoption, right? Do you always keep that in mind?
I don't think mass adoption yet. I don't think this is a system that can handle the masses. I think more about the audience for each different financial primitive. If you look at the difference, like say with Maker, right, 1% of their users are highly advanced leverage traders who are opening up collateralized debt positions or vaults, and going long or short on the price of ETH using this like pretty complex system, right? So they have like quite an advanced user interface. But then for most people who interact with Maker, they just do so through DAI, where they're like sending dollars from one person to another. So I think that like all of the teams doing variations on Venmo, sending dollars from one person to another, are doing like a great job in terms of mass adoption and like where that might go. And I think that I'm more curious about the interfaces that would give you confidence to throw like $1 million, $10 million, $100 million into like one of these protocols, because I think those people are going to be like what move the system forward, like get just the amount of assets flowing through to increase like by an enormous rate. And so I'm more interested in the kind of advanced interfaces right now, because I think that the mass adoption, like wallet, like you send me money, is getting well served.
How do you even test for something like that, or something where it's so high stakes, like high numbers? And how do you know, is it more of an iterative process where you kind of see what works? Because there aren't, that I can think of, many models where you could really test out what users find most attractive in that type of setting.
Yeah, I'm not sure I have a good answer to that, other than I try and put a significant percentage of my own money into something so that I feel the feelings that others are feeling. So there are so many people who have an opinion on like a project like Maker, but at one point I opened a CDP up that was about like a third of my like available assets. Like, I mean, it was just it was terrifying, right? Like I put like if Maker's contract or system broke, I would lose like that money. And when I did that, I really started to understand the system, right? Like I really started to like dive into all the people who made it and like read all the forum posts and go through all like the governance systems and like understand how to do like security and like all kinds of things. And so I tried to like feel the tension that you would feel if you were like putting money into that system, and that helped me like design things for Maker. And when I started working with the FutureSwap guys, and this became like a running joke, is I like went on different futures platforms and I put a bunch of money on long ETH, and it was hilarious because like ETH ran up from like 120 to 200 whilst I was doing the design project. And so like the running joke was just like, Richard has a Lambo now, like he's not like I don't like it, and like then ETH crashed a little bit and all that kind of stuff. But my point is I started to feel the emotions of someone who was like placing these futures contracts. And so often people who invest in this space, design products in this space, work in this space, they just do not have any skin in the game. And so I know I'm not at the stage where I can dump like tens or hundreds of millions into something like that, or it's just not my level. But like I can put in an amount that matters to me. If you put 1 month's income into Maker, you really start to understand how Maker works. If you just comment on Twitter, I like really don't have time for you. And I don't think you're gonna like understand what's going on. So I guess for me, I don't have a design flow that really involves like testing or asking people questionnaires or anything like that. I just don't think that's how great products that I've seen have been made. And so I'm much more trying to empathize with what it might be like to do those things.
Yeah, what is your view on regulation and the tension between entrepreneurship and regulation?
my perspective on regulation has been shaped by two things that I don't think many people have been exposed to, which is the first thing is the way in which like options and stock options and like employee compensation for startups work. And the second thing is like I did together with some friends who built a previous project, Balance. We did the fastest Reg CF crowdfunding raise ever. So I've spent like a decade of my life being extremely like compliant. I'm like learning about like how some of these like securities laws work, not in terms of studying it or being a lawyer or understanding the historical context, but in terms of somebody like desperately trying to navigate this like maze of things. I think that there are two threads that I've drawn from this. That first of all, the accredited investor laws, and this is to quote one of the SEC chairs, are the most un-American thing I have ever seen. And the idea that you need to earn $200,000 a year for 2 years or have a net worth outside your home of $1 million to invest risk capital is one of the most un-American laws in existence that I've ever seen. There's just no two ways about it. This country was built on people coming here, taking a risk, throwing their money into things, lots of stuff not working out, but some of it working really well. That side of it, just on a personal level, I find excruciatingly painful as an existing regulation. And I find it profoundly unfair that as a business tourist from the UK, I was able to like make some bets that like, whereas now, as I have a visa and I live in the US, I'm under like much more stringent rules as to whether I can like invest my own money in stuff. So you can gamble your money away. You can, you can use healthcare to fritter away your capital. You can educate all your kids and go bust. Like you can do so many different things in America that will send you into just the red zone. And those things, they don't, create any kind of stipulations about how stupid you could be with your money. But they do for investing. It just drives me nuts. And I understand why those regulations came in when you didn't have the internet and lots of people were being sold penny stocks and all kinds of things. But they need to be just wholesale cleaned out and start again. And then the problem is that they introduced crowdfunding, right? But they cap the crowdfunding at $1 million. And the reason this is useless is it takes about $50,000 to $100,000 of legal costs and time to like raise like $1 million. And most people don't even raise $1 million. They raise between 200 and 300K. And so they spend 20 to 50% of the capital on the raising, which is so ridiculous. It's much easier to just go get an angel check. And so until you raise the like Reg CF funding to like 10 million, so that as a founder, I can do the work once and then do like top up work each year. And I can raise my $500,000, my 2 million, my 10 million. Then we're in business. We're seeing this in the UK, right? Where there are several really successful startups that have done crowdfunding. And when they go public or get acquired, the people who put the first £1,000 in are going to make £500,000. That is going to be amazing. Like this is just really exciting. So there's those sets of regulations. And then we get to crypto, right? Where what we saw in 2017 and 2018 was just this flagrant violation of securities laws because people went way too far, right? Like when you raise, somewhere between 1 and 4 billion and have billboards in Times Square, as the EOS community did, of course, you're going to run up against regulators. And so all of this is like context for like quite a bit of scar tissue, both internally and I think in the crypto community. What I'm optimistic about is that we're seeing this entirely new set of founders and teams emerge who are building useful financial systems with sensible valuations that have actual real utility in the world, raising relatively small sums of capital between 1 and 20 million, depending on the stage. And with valuations on the networks in the kind of $10 to $100 million range, which is totally reasonable, given the potential of some of these things. And they're just going to ship them. And these things do technically run up against certain regulations, but I don't think that's a huge issue if they are not abusing people or if they're building something kind of new and innovative. And I don't think that many people on the SEC's community who actually understand crypto, like Hester Pierce, think it's a bad thing either. She's then been trying to push this safe harbor opportunity. So as you can see, I feel very strongly about like a lot of things to do with regulation. I think there are a lot of reasons why some of it has existed, but there are a lot of reasons why we as a community should clearly push forward against these things because no great project gets built by like complying. It gets built by innovating, and then regulation comes later. So yeah, that's how I feel.
So great. As a securities lawyer, I just want to say that we have some room for optimism, because there was a proposal a few months ago about amending the accredited investor definition finally.
Yeah. Yes. Amazing.
Based on education, not net worth. And then, as you point out, the safe harbor provision, even though Hester Pierce is stepping down and was criticized by the community for putting that forward, I think a lot of people feel like it was very beneficial for her to do so. And then Reg CF is, you know, there's Reg A Plus as well, which is Blockstack actually was one of the first projects to get approved on a Reg A Plus, and to be able to solicit both accredited and unaccredited investors. And I believe that they are talking about raising the cap on Reg CF. And there was something as well that happened in this pandemic where if you had raised crowdfunding previously, you were allowed to do so now in terms of crisis management. There was a loophole that they put forward. So
that's great.
And then with you know, Chris Giancarlo and the Digital Dollar Initiative and lots of other countries, including China with their CBDCs, I think the government might come closer, or Trump might come closer in this election to approving the digital dollar as his legacy. So it might cause a cascading effect of regulatory change.
Exactly. And your goal, I think, as a founder is to try and hit that trend where it's being met, right? Like, I mean, the founders of Stripe, Uber, and Airbnb, when they began their projects, what they were doing was illegal. It just was. There's no two ways about it. They can song and dance. They can pretend it was fine. It was flat out illegal. But they hit the trend, right, perfectly. And that is why they're all such massively successful projects. Is those founders didn't care particularly for the existing regulation. What they wanted to do is push forward the law. And that's what I'm looking for, is like people who have that level of foresight and that level of bravery and are not frittering away in fear, but are trying to hit the current where it's going. But
how do you know, looking at at a founder or some potential founders, whether they're going to be smart about it or if they're just being reckless, if they're right at the beginning, or do you not even approach founders who are just starting off?
I'm only interested in 0 to 1 because that's only where I have an experience. Like I have no experience in being a successful employee. I've been fired. I've no successful experience in growing a team or like management or anything. I'm terrible at all of that, and like I don't know whether I can fix that like about myself. So I only understand people who are getting started because that's all I've ever done. And I can just very quickly tell when I'm chatting to somebody whether they're the kind of person who is like processing risk and reward about legal stuff like quickly. Because if they are thinking more about laws than about product, then I think you run into some very big issues. And let's just take Blockstack as an example. I think it's a terrible product. Does anybody actually use it? Like when you use the system that they have built and invested millions of dollars in, I have no idea why I would pick this thing up again. Okay, so they've spent all this money and all this time and all this energy proselytizing about a decentralized future and all this kind of like, you know, intellectual bashing of Ethereum and other protocols. But what they've produced is absolutely terrible. And they spent $3.5 million or something on legal bills. I mean, you know, the delta between that the founder of that project's kind of high-minded like tweets and the actual lived experience of using that piece of software is probably one of the widest gaps I've ever seen. And I just think it behooves us to be like, okay, so well done. They did some regulatory innovation, but the product is absolute trash. And that I think is a really good signal is when people are obsessing over that stuff instead of like actually shipping a product to customers or users, they're just going to get into a world of pain. I saw this with Filecoin as well. It's just a disaster. I mean, it's been a complete disaster.
You know, hopefully they pave the way for others to follow them, in terms of, you know, like we think about the first wave of the internet and pets.com and all of that, and people not
Right.
using the timing, and maybe the product experience was terrible, and then later something else very similar was developed and
Yeah,
successful.
yeah. I'm willing to accept that somewhat, but like I don't think the way to pave the future is by building terrible products with with good legal documents, right? I'd much rather have like a great product with bad legal work than the other way around.
So
And
what's your view on Telegram?
yeah, I mean, Telegram was a classic peak ICO mania, right? Where basically all the big VCs wanted to participate in what was happening, but they had no idea what was happening. And so the two things that almost every venture capitalist punted into was Telegram and Filecoin. And they got absolutely wrecked on both of them. It's just been a complete unmitigated disaster. And why is that? Because like, first of all, Filecoin didn't have like a minimal functional project, okay? And they raised an implied network value of 1 to 3 billion, which is just mental for a team of what was essentially 30 people. It was insane. And for reference, Ethereum launched with an implied network value of 30 million, which was much more reasonable, had about 60 people involved. Telegram, incredibly successful chat app, but essentially is running away from Putin at all times and cannot form capital in Russia, has a ginormous server bill, and just comes up with a reason for a token so that they can pay their server bills. So like both of these things are like completely awful projects, and the SEC is right to like inspect both of them because they went too far, right? We know that like startups and new risky projects, like the venture capital has lots of challenges, but matching the amount of money you raised, the amount of progress you've made is like not one of them. And I just think that like those stages of capital are like there for a reason, because founders need to learn how to deploy capital. I certainly found deploying $1 million of capital I raised extremely stressful, and like didn't do necessarily the best job of it. I think I did well with about half of it and terribly with about half of it. And I feel that if I was to do a startup in the future, I could probably deploy 5 to 10 correctly now because I've kind of stretched some of those muscles. But if you gave me $500 million of capital, which is what some of my friends have raised for their projects, like I can't do what they can do. I just can't. I'm not on their level. I'm not. And so any project that is raising, 10x the amount of capital that they're actually capable of deploying always is a disaster. And those are the things that I think regulators should be paying attention to.
Well, thank you for your honesty.
Well, I mean, there's nothing like a startup to show you what you're terrible at, and which is most things. Like I'm not, it doesn't, I'm in very popular company with the people who are bad CEOs, right? They're just like nearly everyone is like bad at starting a company or running a company. Like that's why nearly all companies die or fail or underperform. So I don't feel bad to be part of the masses, but I'm fascinated with people who do it right.
Any other projects that you're looking at right now, whether in the DeFi or crypto space or out of it?
Yeah, sure. I made a small investment in a project called Shell, and they're doing a stablecoin exchange. Stablecoins are growing at like an incredible clip. There's like 40 of them now that are linked to the dollar. There's a few in different currencies, and there's like 1,000 different derivatives of all these stablecoins from like, right now, a lot of these things are kind of piecemeal exchanged over certain different contracts. And Shell have like an exchange system to build like a global liquidity pool of these stable coins and like slide them across. That one I'm really excited about. And then another kid who's just, I mean, yesterday was his birthday and he was still shipping software. I mean, that's how focused this guy is. He's called Alex Angel. He's building primitive.finance and he's doing puts and calls, which are another piece of important market structure on Ethereum. And this kid is just grinding like all the time. I'm so excited for him. I don't know where it's going to go, but I'm just like long on Alex, whatever he gets onto. So those two things. And then there are two projects I can't share right now from the Stripe Mafia that I think we'll look back on in 5 to 10 years and just be like, yep. like the thing is I think the Stripe Mafia is just going to be one of the most formidable group of people ever. Like there's such a high bar for excellence at that company that when you emerge, like it's really hard to find other companies that meet that. And so all these people are just starting companies and like showing us what's possible. So yeah, it's pretty exciting.
Do you find these on Twitter or through your network? How do you know, like, if you want to meet with a founder or want to learn
Yeah,
more?
anyone can DM me on Twitter anytime, and I try and respond to every single DM, which is a lot of work, but it's how I found Shell Guys, how I found Alex, and I'm going to keep doing that. I don't want to be one of these people that says like, oh, I need a referral or anything like that. I just want to be 100% available, because my theory is at some point in the next, like, ideally like 50 years of my career, some kid at some point will like think they've made a breakthrough, DM me and be like, hey, I think this works. And I should be like supportive of that. And then, hopefully it's like a really exciting story. Like, and that's what I feel about where I live, right? Like Silicon Valley is this, if you imagine it, it's like a 50 square mile video game where there are going to be like 50 billionaires in the next 50 years. And your like goal is just to find and help one of them. Like that's like really, like I've never really expressed it like quite like that, but like I think that actually makes sense. That like this is just a gigantic video game for me at this point, and I've like found two, and I want to find like one more, because like once is lucky, twice is a hunch, and third, like maybe I'm not too bad at this. But like
the opening credits of Silicon Valley, the HBO show, just started flashing in my head.
Yeah. No, I mean, Ehrlich was the best angel investor of all time. He had no money. He just let people crash on his floor and like got 1% of projects. I personally, I think that's genius. Maybe I should do that. I should be a modern day Ehrlich.
Awesome. Well, Rick, so much fun to talk to you. Thanks so much for coming on our video, and we will talk to you soon.
Yeah, anytime. Yeah, nice to chat to you both.